Good morning, good afternoon, good evening. How's everyone? ABL, how are you doing? Want to make sure that everything is working fine first. So let's give it a couple of minutes. Hey Jason, hey Val. Hey Wendy, good morning. Good morning, Sarah. Let's give it a couple of minutes before we get started. Anyone saw what happened on the Aussie dollar? Well, the Aussie employment numbers actually. Got a good number there on the Aussie employment early this morning. Works. That works too. Okay, great. Good morning, Lainey. How are you doing? Thank you for that, Val. Very nice, Jason. Good job. 2 more minutes before we get started. It is Thursday, the 14th of September. Half the month gone, almost half the month gone already. Hope it has been a good, productive month for everyone. Supported by higher part-time jobs. Yeah, yeah. Well, Australian employment numbers are good proportion of it is always supported by the part-time job numbers to be a standard. Alrighty. If you're new to the session, drop a message, say hi, let us know where you're joining us from. Whether you're on TradingView or on YouTube or on Facebook, do drop a message, say hi. And the link is there again. If you have not already, do join the Discord channel. And if you can help me out, click that like and subscribe button. Okay, let's get started. Again, welcome and thank you for joining me on this daily market analysis, the 14th of September. During this daily market analysis, what I do is I share with you my views on the fundamentals, the news that had happened last night. We had the CPI number, it came out at 3.7, a little bit higher than expected. We look at the fundamentals in terms of what's coming up. The ECB tonight, is it going to stay at 4.25%, or is that leak that we had early yesterday morning accurate, that the ECB might be looking at a 25 basis point rate hike, taking it from 4.25 to a 4.5%? That's the question for today. Put it into the chat, let me know, what do you think? Are they going to stay at 4.25 or hike it to a 4.5%? With that, what we'll look at as well is the technicals, where price is, where it could head towards, and then the possible trade setups on the H1 time frame. Right? Why H1? Because I'm looking at getting into trades today all the way through to tomorrow until the next time we speak tomorrow, so that we can look for more trade setups. It's not on the H4, it is on the H1 time frame. With that, talking about trade setups, please remember, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. So please do your own due diligence, because the contents of this webinar is not intended to be a recommendation to trade a financial product. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Okay, with that quickly gone through, let's jump straight to it. Hey Chris FX, how you doing? Hey D-Train. Jason says hike. What about everyone else? How you doing, Spiros? Sarah's asking, I want to ask you about the GDP and CPI and PPI. They need 2 or 3% to make a good trend. Which one are you talking about? The GDP, CPI? I guess you're referring to the GDP for the UK, the CPI for the US, and the PPI just released for the Swiss. You know if I'm right on that guess there, Sarah? Okay, we'll get through that. We'll get through all of that. Okay. The thing about that is, hey Juan, how are you doing? I think you're the first person I have from Paris. Okay, so the thing is, now looking back at the news that we had from yesterday, the GDP number that we saw for the UK, we spoke about this yesterday, but just a quick recap, is that it went from 0.5 to a minus 0.5%. Right, for the UK month-to-month GDP went from 0.5 to a minus 0.5. In this case, GDP does not have to be at a 2 to 3% target level. It does not develop that trend. The GDP is really the gross domestic product, how the activity, the economic activity of the economy of the country. So we do want it to, or we do prefer for it to be in a positive number, showing growth in the economy, showing good activity. So when we see it going month to month to a minus 0.5, that's not good news for the UK, right? To add on to that is when we look at GDP on a quarter-to-quarter basis, this is month to month, but when we look at it on a quarter-to-quarter basis, when you have 2 consecutive quarters of negative data, that signals a technical recession, right? So I'm sure that you have read the news, you've heard a lot of headliners talking about a recession. That's how economists view it, is that when we have quarter-to-quarter negative numbers, it goes, it becomes considered as a technical recession. So with that one, and then looking at the US CPI number from last night, was a 3.2. We were expecting it to stay at to get up slightly to a 3.6, but released a little bit higher than expected at a 3.7%. Okay, so a little bit higher than expected, the CPI, or the inflation growth number for the US, to a 3.7%. When we look at the CME interest rates projection, in 6 days the FOMC is meeting, and you can see that it has not, in fact, I think it has slightly, I think it was 96 point something percent that the FOMC was going to hold rates. Right now it's at 97%, so almost a certainty that the FOMC are going to hold rates at the current level of 5.25 to 5.5%, with a 3% chance of a rate hike. With that, in November, don't remember what the numbers were from yesterday, but it's 56.8 to 42% for a rate hike. I think that dropped a little bit as well, right? So the focus is not so much on to the focus is not so much on to there we go. So that shows you the change. 1 week ago on the 7th of September, it was 92 on the 12th. Right now is at 97%. So increasing certainty that the FOMC is likely to hold rates at the current level for the upcoming meeting. The focus is on to next meeting in November, on the 1st of November, whether they're going to hike rates. I think between 20th of September to the 1st of November, we do have more PCE price index to be released, more CPI data to be released, employment numbers to be released as well. So I think that's going to factor into this decision. But for now, it looks like that's more of a certainty. And because of that certainty, in terms of no change coming from the FOMC, that's why we actually saw the dollar not spike up, right? Or despite this 3.7%, the dollar index shot down during the news, went back up to 1.0496, and then continued to fluctuate along this 1.0470 support slash resistance level. Okay, so that's what happened with the news from last night. I want to know if the GDP and the CPI and PPI, are they both working the same percent in terms of growth? And no. So GDP, CPI, PPI, all very different calculations of different aspects of the economy. GDP is the production levels, CPI is the inflation growth, while PPI, you can see here, is the cost or the price of goods and raw materials purchased by manufacturers, right? So the cost of goods purchasing, what's it called? Purchasing price index, right? It's a purchasing price index, so it actually shows you the price of production, while consumer price index, the CPI, is the cost of buying, and then the GDP is the actual percentage of production. So all very different things. Does not exactly correlate with each other. So you're not going to see a scenario where GDP is positive and then CPI should be, or in this case GDP negative. You don't expect to see CPI being negative for the UK, right? So all rather independent, slightly independent. You would notice that if CPI or inflation is sky high, then that might affect GDP, but you're not going to see a direct correlation with that. Yeah, I hope that makes sense to you there, Sarah. It's I could spend hours talking about this. It'll go into an economics, fun economics, almost like an economics lecture between the relationships of GDP, CPI, and PPI. But in the shortest and sharpest sense, it's not directly correlated, and they don't act towards the same percentage, or they don't work towards the same percentage levels in terms of growth or downward moves. Okay, hope that answers your question there. Good morning, Angel Case. How are you doing? Hey, Diana. All right. So, hey, Klasniz. So that was the news that we had for the US in terms of the CPI number. Early this morning, 9:30 a.m., we had the Aussie employment change number was minus 14.6K, so revised to minus 1.4K. Expected a 25.4K, came out at a 64.9K. So employment change, a lot more people working, but as BL was saying, it is a big proportion of it was in the part-time employment, right? So unemployment rate remained at 3.7%. Participation rate increased. Employment increased. Employment population 64. Monthly hours worked. Yep. So still relatively good news there for the employment numbers for the Aussies, while unemployment rate stayed at 3.7%. With this news at 9:30, what we saw on the Aussie dollar, very messy chart here, is that this was the 9 o'clock time, right? So we saw a big push before the news, a big push from 0.6420 up. I feel that that was a front run of the news. Maybe a leak, but it was front running the news. That's why we saw the big push up. And then what you would notice is that was way outside of Bollinger. This is why I didn't get into this news, because as it closed outside 9:30, it was still outside. When the news came out, we saw the Aussie dollar come back down, despite the good news, right? Despite the positive employment change number, we saw the Aussie dollar spike back down before pushing up slightly again. So this was a good example of a scenario where you will see a news event, you see a good strong number, but the price doesn't move according to what I expect. So I will set out of this event and just let it run, right? So it's news, expecting it to go up, expecting the Aussie dollar to shoot up, but when it was released, the Aussie dollar shot down, and then that's it. I just forgot about, well, not forgot about, but just decided to get over that news and not trade that event. I'm not going to force or anticipate that I should buy it up, because immediate reaction was to the downside. I want to know if what number makes GDP high and what number makes it low. GDP is a calculation of this is testing my economics lecturer is going to kick my ass on this, but it's a calculation of consumer spending, government spending, tax, import and export levels. I'm pretty sure about that. Let me just double check that. There you go. Private consumption, gross private investment, government spending, exports, and imports. So it is a very big number calculation. What I tend to say is that, as you are trading, you don't need to really calculate a number, because it changes all the time. There are many factors and contributing levels, contributing data that leads to the GDP. So I would just look at it more, or approach it more on the idea or on the factor that you're trading it based on the previous, based on the forecast and the actual. How it's actually derived, as much as I know slightly, with a bit of refreshments, you don't need to actually know the calculation of that. It's more based on actual forecast and previous. That would be the easier way to use the data to be able to trade. Okay, I hope I get that point across. Diana says, Gene, it would be great if you give us a economics lecture. I would tell you that economics lectures are interesting for the first 10 minutes. Then after that, it's boring as watching paint dry. So I wouldn't wish it for you guys. Okay. One's asking, do you guys know if any sources of info to learn about economic data, educational? One, subscribe to my channel. There is a whole set of information there about economic data, educations on fundamental analysis and economic data. So check out the videos. If you can't find it, join the Discord channel. I'll put a link in there for you guys. With that, Diana shorted Swiss yen during PI. Okay, we'll check that out. Gold is dropping. Okay, Noel says gold is dropping. Yep, we'll check that out too. Okay, so that was the news with the Aussie from this morning. Not much else, with the main focus for tonight at 8:15 GMT plus 8 with the ECB with their interest rate decision. 4.25, expected 4.25. There was a leak early yesterday morning that they might do a 25 basis point rate hike to a 4.5. I view, my point of view, an opinion is that they're most likely going to stay at 4.25. I don't know where the leak of a hike came from, or rather came from Forex Live. But since that leak, there has not been further comments about another 25 basis point rate hike. So I'm operating in my mind, I'm still thinking of it as the likelihood that they're going to stay at 4.25%. Okay. Then with that, we have retail sales number from the US, 0.7 to a 0.1, a small drop in retail sales number. While I'm not concerned about employment claims, and we're going to see some volatility at 8:45 p.m. tonight with the EC press conference. That's going to see some volatility on the euro dollar, so just watch out for that. So with this in mind, it's going to get quite interesting tonight. Just make sure we'll talk about this shortly. Okay, I'm not going to promise a live training session because I think I'm going to be doing my own trading during this time. I don't trade and talk too much, so I think I'll be doing my own trading. But if I see anything interesting, I will be sharing with you guys on the Discord channel. Okay, so make sure you join the Discord channel. Hey Mel, how are you doing? Hope you're well. Good to see you on the session. Most welcome there, Tonya. And most welcome there, Sarah. D-Train said your stream is more than enough for us to understand the most relevant. Yeah, you know, there's so much economic data out there. There's so much to read and possibly so much to read, possibly so much to learn. It's just sometimes too much information. What I tend to do during these sessions is really drill down on what you need to know, what's going to move prices, or most likely going to move prices. Okay, so with all that said, let's look at the charts. Dollar index. Take away all that squiggly lines. Okay, so we take all that lines away. That head and shoulder that we were looking for did not materialize because it did not break below the neckline. So we'll take away those circles as well. And you'll see that the dollar is still fluctuating along this 104.70 support / resist level. Right? It's still sitting there. And as much as it sits in this range, what you will also notice is that it is narrowing down. Right? What I'm looking for here is a breakout on the dollar. A breakout on the dollar. The idea, the initial thought was that if retail sales number does come out at 0.1%, we might see some weakness on the dollar. But before all that, we do have the ECB with their rate decision, monetary policy statement, and also at 8:45 the press conference. With that, I think that we might see some weakness on the euro. We might see some weakness on the euro, which would lead to that strength or the recovery in strength on the dollar index. So because of that, previous trend was to the upside. You can see it squeezing down right now. What I'm looking for is a breakout to the upside. Looks like a repeat of what we said yesterday, but today is the 14th. And I am looking for it to break out to the upside. So overall upside, it did test 104, almost 104.40, 104.50. Okay. Overall upside, I would be looking for it to break out of the right above 104.8, which would be about there. Could see 105, could see 105.10. So basically what I'm saying is that I'm looking for it to break above 104.80, get towards 105.10, towards that resistance level again. And I think that would be a fair view for the dollar index. 38.2 holding quite strong. 23.6 broken. That's good. Now, if we checked this move levels, 1.8 is right there. That's broken already, so we can take that one away. Okay. I'm still looking for this to push back up. I think that that's a reasonable view. If it does break down, it will find 38.2. I think that might not be, could happen, but a bit more likely, I think it's going to push to the upside. Okay, so with that, looking for the upside on the dollar, then looking at the Kiwi dollar, right? It's going to be quite similar. So yesterday we were looking for it to go up, test, and push back down. Did not happen, right? In fact, during the news, I'll move this a bit to the side. During the news at 8 o'clock, what time was the news? It was at 8:30. So yeah, during the news, we did see the Kiwi dollar spike down before closing back up. So this would not have triggered. And this is also one reason why I don't like setting sell orders, because it could come down, trigger your trade, next moment spike back up, and you'll be a stop loss within a minute, so to say. All right, so because of this, I do like to look for the candle to come down, close below the level before I get into a trade. Now that it spiked up and it's found that 50% level, take that one away. 50%, and it looks like it's rejecting 50. I wouldn't want this as a resistance. Take that one away. That makes sense. So you could even be looking for sell, say 59. I would say 5920, but that looks a little bit close. So I might even go for 5915. Stop loss 25. Take profit 50 to the downside. Right? So the reason why I'm looking at this is firstly that 50% level, rejection there, and a rejection, looks like a rejection now, anticipating that dollar strength, a breakout dollar strength to the upside. This is going to push it down. So we could be looking for it to come down this way. So 5915, stop loss 25, take profit 50. I would be happy with that. 5915, stop loss 25, take profit 50 to the downside for the Kiwi dollar. Fair enough. Okay. That then onto the Aussie. Right, Aussie again, very similar to the Kiwi, also finding that 50% level. Did not trigger our trade, so we take that one away. In fact, the other thought that we had was for it to go up to test 50 before selling down. Looks like it's developing now as well. Okay, so what I would be looking for here on the Aussie if you were to sell down 6425. Hey Jamil, how you doing? Stop loss 25. Take profit down to 60. But I would say that there is a strong consideration at about 0.64. So you do have a 1:1 risk reward ratio to the downside. Then at best a 1:2.3 to the downside for the Aussie dollar. Because the 61.8 level is right there. So I'm considering these points here. Okay, so Aussie dollar would be 6425, 25 pip stop loss, 60 pip take profit. Let me do that. 645, stop loss 25, take profit 60. Possible hurdle at 0.64. There we go. All right, so this is what I'm thinking here on the Aussie dollar. If it does push down, trigger the trade, you have a 1:1 this way, right? And then if it does break this level, then we're going to see a 1:2 to the downside. So it needs to break, not could bounce, very similar to what happened here. Okay. That why I'm not considering a possible bounce here on the Kiwi. I think that doesn't look like a very strong level on a possible bounce. Right? It's a bit of a not a very strong bounce. There are many levels here. So I think that it's not a very strong level, that it could cause a bit of a hesitation. I am very kind, and I will explain how CPI influenced the exchange rate of Japanese yen. I assume it affects US pairs only. Okay, so CPI, I would say that the CPI for the, and I think you're referring to the CPI from last night at 3.7. Okay, so every country releases a CPI number, right? Every country releases a CPI number. We did see that, take this one away, right? We did see this push, right? This is on the US yen on release of the news. That dollar weakness, that dollar strength, push it back up, came back down again because of what we saw on the dollar, right? Pushing back down. That's why we saw this push out. So it does, CPI does affect the yen because it affects the dollar, and that's why we see it affecting the yen. If you're talking about the Japanese CPI, then it's always, inflation growth in the Japanese economy has always been an issue. That's why we're seeing that Japanese yen weaken consistently. Okay, so it does have, CPI does have an influence on the yen through the dollar, So I think you're going to make reference to the Swiss yen. So if you see at this point with the, okay, I'll put one beside, right? How it's fluctuated at that point. Then if we look at the Swiss yen at that same time, I'll move that one away, right? We actually did see a similar move. So it's really the way it's driven. No clear directional bias from the Swiss, right? Swiss still sitting in that horizontal fashion. So no clear directional bias from the Swiss. So the volatility of the Swiss yen was driven by the way the US yen was moving. The way the US yen was moving was because of the way the dollar index was moving. Okay. Hope I answered your question there, Diana. Then, with that said, very good questions today, everyone. Got all your everyone's found their keyboards today, so good questions. Good, keep it coming. All right. With that, and take this trend line away. Oh wait, let me just leave it there first. So yesterday we were looking at the dollar yen continuing to push to the upside. I was looking for the dollar to find some strength or to continue that strength back up. Because it dropped, it broke that trend line. I'll take that away. And that trade did not trigger, so we'll take that away for now. You can see as well that that spike up, a lot of you would be watching that, did kind of close up that gap before coming back down. So a lot of people will be looking for it to close the gap. The gap happened on Monday. It only finally closed on Wednesday night. Okay, so it does take, sometimes it does take a while for gaps to close up. Hey, Bila, how are you doing? Most welcome there, Diana. So now with the US yen, looking at the levels, you see very clearly that that spike up and the retrace found the support here. Take that one away, put it there, and can take that 50 away because it's broken and one stays there. Okay, so you can see that on that move up, since Monday pushed up and then found that top, now retraced back down, found 38.2. Seems like it's bouncing back up to the upside. Hey Anya, how you doing? What I'm looking for here would be further upside, but I would be extra cautious. Right, dollar index pushing up. We are finally seeing the dollar index push up together with the yen pushing up, finding a good strong, well, good support here at 38.2. I would be, if you were looking to buy here up 50 pip, stop loss 25, that would make sense, but it might be a little bit early to get in. It might be a little bit early to get in, and I think that if you don't get in now, if you do not get in now, it might very quickly be too late to get in. Right? It's right in the middle there with a lot of candles and volatility. So if you don't get it right now, or don't rush in, disclaimer applies. But if you don't get in right now, then it might not be reasonable to try and trade it up to this point. Okay, because if, say for example, you waited till 147.35, then you would have a 45 pip take profit, you would have a 30 pip, 35 pip stop loss. It's not really worth doing. So what I would say is wait it out. Let's see the dollar yen push up, right? I like how it's found very big resistance along this point at 140, just below 148. It might be more worthwhile being patient, quite similar to yesterday's view, 147.95. Take profit 70 pips, stop loss could be quite tight, no more than 25 to the upside. All right, so it's I know I kind of look at it possibly going to the upside, but I don't think it's worth trying to trade it up. Look for a breakout and continuation to the upside there for the US yen. Okay, so 147.95, stop loss 25, take profit 70. 147. Exactly what we spoke about yesterday. 147.95, take profit 70, stop loss 25. Just down a bit. Hey, good afternoon, Jana. How are you doing? Still looking for this to push up. Yep, that all still makes sense. Good. That's going to go up. If you really had to get into a trade on the yen, then maybe look at it on M15, right? Next 4 minutes at 3:45. If it closes it like that, you could be looking at a small time frame, a 15-minute trade to the upside like that. 30 pips. Stop loss still doesn't look great, but it's a 1:1 to the upside there. US yen. Okay, 15-minute trade, 4 minutes it closes. Could be looking at that 1:1 trade to the upside. Then back to it is the pound dollar. Right? It's the pound dollar. Now look at that. Came up, tested that resistance. We were looking for this to come up and test that trend line before pushing back down. It went up a little bit higher than we expected, back to that holding below 1.25 before pushing down. This does give us another opportunity to sell it down. This trend line does not, I would be quite happy to take it away. Yep, I'll take that away. Then for the pound dollar, what I'll be looking for is selling opportunity. There is no major pound news to be had today. So 1.2470, stop loss 25. Take profit, you have a 1:1 there. Again, same. Then 75 to the downside. Right, so these levels here, it could form a 1:1 or pushing down. So I like this. I like this a lot. Really? Could even take this. Leave it there. Okay. So 1.2470. It's very close. It could be within the next hour. 1.2470, stop loss 25, take profit 75. So 1.2470, stop loss 25, take profit 75 to the downside. Hey Pips Apprentice, how you doing? All right, there we go. That's on the pound dollar. Guys, remember, if you are on the session trading view YouTube, help me out, click that like and subscribe button. That would help massively. And if you haven't already, do join the Discord channel as well. Okay, so advertisement aside, now back to this euro dollar. On that news, spiked up, tested 61.8, coming back down. Now again pushing back down. You would notice that we do have this pushing slightly to the upside, coming back down. And now we're into the news idea where they're not going to change rates, they're going to hold it at 4.25. press conference, we are likely to, maybe it's binary risk. Yes. Set for hawkish pause as the economy turns south. That's interesting. Hawkish pause as it turns south. Okay, so what it's trying to show, still looking for that downward push. Oh, I got too many lines, so I need to clear out some of these lines. That's holding, that's coming down. So what I'm still looking for is a break to the downside. H4 time frame. With an interim level there, major support there, that makes sense. That okay. BL has a good question there. If there's a 25 basis point rate hike, would it be a dovish hike since it would be the last hike for the year? I don't think, well, I think that any hike is, we've always seen the ECB, and I'll show you this example here, is that the last time round, July 27th, when they took it from a 4 to a 4.25, right? July 27th, where is it? Oh, I know where it is. Right, when they took it from a, there we go. Right, when there was a hike, it actually went from 1.1140 pretty much straight down towards 1.1, right? So a good 100 over pip drop, and that was on a hike. So I don't think it will be a, because I don't think the reason will be because it'll be a last hike for the year. We've seen every time that the ECB hikes, we do see the euro dollar drop. So 3.75 to a 4 on the 15th of June. There we go. That news there. Case. Okay, no, this time when they took it from a 3.75 to a 4, we actually saw the euro dollar spike up, but previous trend was to the upside. One more, we'll do one more on the 4th of May. Another 25 basis point rate hike. About there. And you see that point, we actually saw a big drop. Here we saw a drop there as well. So over the last 3 occasions, a hike, saw the euro dollar drop. Another hike, saw the euro dollar push to the upside because of the previous trend. I would say I think they were quite hawkish at that point. From memory, they were talking about possibly no more hikes, and dependent on data. Then on to the most recent, another hike, saw it drop. So 2 out of 3 times we see a hike and we see the euro dollar drop. So back to now, I'm more tempted to look for the euro dollar to drop, and that's why I'm more tempted to look for the euro dollar to drop. What we could be looking for, be a bit safer, 1.0715, because we do have a couple of hours to the news event. Take profit, a good 75 pips to the downside. If it does come down and trigger this point, could get away with about a 25 pip stop loss, right? Because you'd see again, I'm shifting the charts around a lot, with the euro recently, for the last year, euro news, does not have that much of a whipsaw. Right? News comes out straight down. The other time, even when it went up, news came out straight up. And then on May again, news came out a small push, but then a big drop to the downside. Very different from back in the day when I first started trading the euro. During the news, you see a big spike and a big down and a big spike again. It whipsaw all over the place. Now it seems to find a bit of a clearer direction. So because of that, I think that it does break that trend line 1.0715. You could get away with a relatively tight stop at 25. Take profit at 75. Okay, so that in euro dollar 1.0715, 25 to 75. Euro dollar 1.0715. Stop loss 25, take profit 75 to downside. Watch for okay. Fair enough, fair enough. Makes sense. Then onto the Sweezy. I'll keep that same view. It's been fluctuating in that range. Needs to break out. Looks like it's going to break out. I'll just move this right across and say that it goes above 8945, 20 pip stop loss, 45 pip take profit. It's the same thing, 8945, 25, 20 to 45. I'll maintain that view for that breakout potential on the dollar. Okay, straightforward on that one. CAD did not drop as far as we expected before the bounce. It did break out of that consolidation. Pull this down to this point. Take away some of this. Some levels. So we have this whole thing needs to come back up, break above, finding a bit of a double bottom at this point. Right, a very narrow double bottom here on the US CAD. I would consider, or see, it came down to this point, tested 23.6, came back down again. Dollar strength should push this up, but what you see here, that dollar strength right now is not seeing a direct push on the US CAD. Right? So here's a thought. Here's a thought that as much as we're all looking for that dollar strength scenario, what if the dollar does push down instead? Right? And if it does push down, then you might have a good selling opportunity here on the US CAD. And that have a bit of a level there. Could look to sell down aggressively. You could look to sell 1.3520. I think it would be better to be looking at 1 point below 1.35. So 1.3490. Stop loss 20 pips. And this is a counter trend. Remember, this is a counter trend trade. 1.8 there. I think that's a bit too near. I think that we have another level about there. That might be trouble. It's the downside. We do have a bit more levels further down. So something to consider about counter trend trade idea on the US CAD, right? If we see a dollar weakness scenario, then we could be looking to sell the CAD down. Just as another way to give us a bit of an option. Could be looking at US CAD. We're looking to sell down 1.3490. Stop loss 20. Take profit 50. Possibly even further down. Stop loss 20. Take profit 50. This is on DXY weakness scenario. Okay. Don't go trying that out unless we see that dollar weakness. We've seen a lot of dollar strength setups. So, I'll take advantage of all the other dollar strength setups. This will be on a dollar weakness scenario. While last, we'll look at gold, where it's performing like we expected. So we were looking at this yesterday at this point. Look for it to push up towards this level between, remember I was telling you that gold was likely to retrace between 23.6 and 38.2. It's done that exactly before pushing down towards 1903. It's doing that. It came down halfway, bounced back up. Now it's on the way. It's at 1905. Looks like it's going to get to 1903.55, right? Or 1903. So that was what we were looking at yesterday. And it's moved perfectly right now. What you could be looking out for is below 1903, 1895. Dollar strength, big dollar strength is going to push gold down in the inverse relationship that it has. So 1903 to 1895. So that worked nicely. Then we would say that gold below 1903 could get to 1895. There we have it. That's the plan. I like how the dollar is moving right now. So with the dollar still pushing to the upside, then doing a quick review, the dollar, look at that, that's forming up. I like scenarios like this. We might be done with our trading even before the ECB news event, just so that you've secured your profits. You might not even have to trade during this event. If price continues to move nicely over the next couple of hours. So the Kiwi dollar is getting there. The Aussie dollar as well, a little bit further away. US yen, a lot more to go, right? There was that 15-minute setup that we were looking at. Would have been in the money a little bit, but safer approach will be for it to break to the upside. Pound dollar retracing slightly, is just at that resistance turn support level, so it's still got a bit more to go. Euro dollar pushing down out. Not enter this before the news, just be careful there. Squeezy looks like it's trying to break out to the upside, and the CAD might push back up. It might push back up, but I'll keep this as a substitute, keep it on the bench for a possible counter trend trade back down. With all that said, a lot of information and very good questions from many of you. I hope you are not overloaded with information. If you have not already, do join the Discord channel. And if you can help me out, click that like and subscribe button. Any further questions, ping me on Discord. I'll be happy to help you with that. And thank you, BL. In the meantime, trade well, trade safe. I'll see you all on Discord. If not, I'll see you tomorrow, 3 p.m. GMT plus 8. Thanks, Zubel. Love the interesting questions you answered so clearly. Class was really tested you. I know there's I might have a bit of a sweat today, but no, all good, all good. Keep it coming. Thanks, Karsten. Thanks, Melanie. All's very well. Thank you, Diana. Thanks, Wendy. Thanks, Lainey. Take care now. Bye bye.